Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Brian Stutland, Managing Partner at Equity Armor Investments, and Greg Lai, founder of Affinity Investment Advisors. We're here to discuss navigating the market and shifting investor sentiment. It is great to see you, Brian. Welcome back to Trade Talks. I want to kick it off with you. Let's talk about the Fed's impact on the market. Do you think a rate cut is imminent, or do you think we'll potentially get it later down the line post-election? And how do you think it could affect the stock or bond market? What market is telegraphing it more appropriately?
Well, I mean, certainly, we got some CPI numbers, and let's just start with that. The economic data looks like you did want to lean towards now some significant rate cuts, actually. When you look at the CPI number coming in a little bit weaker than expected, we got a little bit of a reversal today on the PPI number, so a little wishy-washy. We heard the Fed speak just over this week here on what direction they're kind of looking to lean, and it seemed like no rate hikes are imminent, and if anything, rate cuts could be down the pipeline. And then we saw a massive market shift yesterday from Nasdaq growthy kind of names to spread out more broad base into the Russell 2000. So it does seem like in the back half of this year we get at least maybe one rate cut. That's what the market's now looking for, and then it's starting to price in 2, maybe even 3 rate cuts going into next year. So that certainly would put some tailwind, I think, behind the market. In terms of valuations being able to go higher. Let's just hope that these rate cuts aren't coming because economic activity is slowing down and a recession is imminent, because then those rate cuts might be too late to the party.
Yeah, Brian, and that was what we were talking about at the beginning of this year. The market was applauding 6 to 7 rate cuts, but you think about that on a higher level, that indicates there's bigger trouble down the line if you're getting that much in such a short amount of time. But Greg, let me ask you, let's talk about the tech sell-off that Brian had just referenced. Do you think that's a buying opportunity? Do you think that has more legs and that some sort of a correction is, going to happen within that market?
Well, thanks. The volatility is normal, and I don't think the sell-off yesterday is a sign of trouble at all. In fact, exactly what Brian has said. I think the markets are at a point, particularly with where the Fed's at. I kind of view the whole Fed cut thing as moving deck chairs on the Titanic, but we are in a spot where we're going to start to see rotation. And candidly, the Fed's done a great job. This is them trying to stick the landing. They want to be safe rather than sorry. So no, I don't think it's a long-term pullback, but definitely we're going to start to see some rotation. Mag 7, highly correlated, big exposures. So I think smart money really wants to move into the other parts of the market.
Yeah, and that's a good point that you make, because it's all we've been hearing over the past, for essentially the whole year here is the risk concentration, just a handful of names. Isn't broadening breadth what investors are looking for?
I think they should be. I mean, they get emotional. Narrowness in the markets doesn't necessarily indicate a top in the market. In fact, typically the blow-off occurs when there's a broadening, and we start to see sort of everything start to move. So I think it's emotional to sort of follow that momentum, but it is now time to start to think to fade those names. So I'd be selling on rallies, and I wouldn't be building any more exposure to these names.
Yeah. Well, Brian, let's take a look at the VIX here, because if market participants seem to be worried, the VIX has been at levels where, it doesn't seem to be what's playing out in the marketplace. We've been at 12.5, certainly before yesterday for, it's been low for a while.
Yeah, I mean, if we look at maybe some of the VIX futures, the VIX futures curve, actually, I brought up a chart here just to kind of, show you what that shape is looking like right now. And when you look at the VIX futures curve and you see how steep it is relative to what it's trading at right now and where the VIX is at, when you go out to all the way even to October, with the VIX futures in October trading up near above 17, that steepness is telling me that there is some warning signs in the market here to be aware of and be careful of, because maybe this is just the election and jitters around that, and certainly as we have more uncertainty about whether Biden is going to be able to participate in the election, or is he going to step away, and that uncertainty occurs, it's normal that traders are buying volatility in the back half of this year to sort of play for some pretty sizable market moves. And so I'd expect that fruition to come true here. We've seen it come down a little bit. Things have been in a feel-good mode. The market still feels like it's in its uptrend, but just watch out come late Q3, early Q4. A lot of volatility is being expected to come back into this market.
Right, but Brian, isn't volatility typically elevated at the longer end of the curve because the future's a future? No one knows what's going to happen. There's no crystal ball. Is it more elevated than historically, or at least in the past 4 years, if you will?
Yeah, it is typical when you have a bull market to put some sort of premium in owning some insurance down the back end of the year or later down the pipeline, because obviously if things are good now, you want to protect for the future, right? But when I look at this VIX futures curve and the level of volatility and the put buying activity going on in the S&P 500 and general markets on the downside, I do see that level is relatively elevated compared to other time periods here. And so certainly it feels like, is this just a premium on the election? That's hard to say. But to me, it feels like people are expecting some sort of sell off, some sort of little bit of a correction in whether it's early 2025 or around that election timeframe where you're going to see some elevated time periods.
Would you agree with Greg that sentiment is shifting more into small caps and moving away from the larger cap stocks?
I don't think that was the case early on. I think they were sort of abandoned, like people really didn't like them. But here it makes a lot of sense when you think about valuations, the Fed put coming back into play. That's where the best risk return is in my mind. And so investors are going to fade the Nvidias of the world and start to move into those. And again, as Brian said, because they're concerned about sort of the risk and the out periods.
So then, Greg, it sounds like when you think about portfolio positioning, at least going through the next quarter, that you want to see, more global, more diversified, because you're not just in domestic stocks.
Yeah, that's correct. I mean, clearly, the global markets have a better valuation, are probably in a cycle where there's more upside than downside. That's really sort of what I think is playing out now is people are starting to weigh the risk versus return, and the large cap growth trade is very extended. I would believe it is going to be volatile, but investment managers are looking for cheaper parts of the market because they don't want to get out completely. So they want to stay invested. They don't want to miss anything. But mid caps and small caps, it seems that's where to go.
Yeah. Well, Brian, let's switch into earnings season for a moment here and talk about Google's earnings expectations in particular. While we can't predict the future, you can discern some way in which options traders are feeling and what their expectations are going into the print. So what are you taking a look at? How are options traders thinking?
Yeah, I think it's going to be interesting because obviously that we got the bank's earnings earlier today, and actually that didn't turn out too well for really a majority of them. And so, is that a question of are the banks in bad shape, or just people don't care about them and they're still looking for other parts of the market to invest? That could be the reason here. But I'm really looking at Google when I look at sort of the leaders of the tech sector, and I know it seems like the rally may, to Greg's point, be broadening out. If you looked at the Russell 5000 and what that's done, it seems to just be breaking out. But Google's going to be an interesting play here. Earnings in basically July 23rd, I believe, is the date. Option traders looking typically looking for about a 5% move for Google after earnings, up or down. But I think what's interesting when it comes to this stock here is when I was taking a look at it, it has very heavy call activity, but yet the biggest open interest strike right now is the 170 strike on the put side. And these are options that are expiring just after earnings. So I think that's a level that, I'll be watching close to, because when we have big size open interest around a certain strike with the stock that typically trades a lot of call activity, that sort of strike can act as a repellent. And, I don't want to see a stock sort of break through those levels and see further selling pressure to the downside, but maybe it acts as a repellent to the upside and things are rosy. But that's something that I would be watching. And obviously traders have some big open interest and key ideas about that 170 level.
Yeah. And Greg, when you think about the impact of the mega cap tech names, I think investors are a little bit concerned. What happens if you get a Micron type of quarter where you nail it on every metric, but your guidance is lighter than the street expected? I think that's concerning for the investors that have exposure to that particular space. So what do you think the impact of Google earnings could be on the overall market?
Well, I mean, I think you nailed it. Nvidia has been sort of the tip of the sword, and Google ultimately will be where the AI battle is won, right? It's really at the user experience. And so I think Google will, and it being sort of one of the first reporters, people will start to want to understand how the business model works when it comes to AI. and how that profitability will manifest itself. So I think Google will be very important, particularly as you said, sort of where they guide. What does this investment in AI mean, and particularly what does it mean to them?
Yeah. And Brian, I think that's what's so challenging about the market, that it's so fixated on, let's even call it 2 or 3 names, right? Meanwhile, there are so many other, investment ideas that you generate off of what's happening with Nvidia and the associated stocks. I mean, the energy demand, the industrial demand to build data warehouse centers, I mean, everything that goes along with that. I'm just surprised that these derivative plays either didn't play out or there was really no long-term momentum behind it.
Well, I don't know necessarily if the derivative plays haven't played out. I mean, we are probably a little bit overweight into this sort of AI play. I think it's the party's just getting started, and there are a handful of names that participated. I mean, look at earnings from Corning, which helps manufacture some of the chips needed in terms of the materials play. That earnings were very good. The stock was up sharply, lending into the fact that they're seeing increased demand from this whole generative AI play and the build out there. So there are areas, and just to kind of circle back, like, is it just the Mag 7 or is it more? I have a chart here on the Wilshire 5000 about the rally just sort of broadening out beyond just the hardcore AI tech play. And it seems like we are just about at a level where, hey, the rest of the world wants to participate in this global rally that's been occurring. And if interest rates are going to, now if some of the inflation is controlled, and inflation's coming down and interest rates are sort of compressed, maybe the rest of the world now participates with that.
All right. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.